Hello and welcome to India Business Hour. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The Union government will soon open applications for companies to make electric cars in India. Will offer a 15% concessional import duty provided certain conditions are met, including investments in both brownfield and greenfield projects. Sources say Tesla, which is set to start sales in India by April, was not part of the stakeholder consultations. Walmart-backed PhonePe is gearing up to go public in India, but stopped short of announcing a timeline. PhonePe was valued at $12 billion as per the last funding round in January of 2023. Hindustan Unilever's MD and CEO Rohit Java says a revival in urban consumption is still a few months away, even as macro factors turn favourable. Adds the company's premium brands have benefited from India's quick commerce craze. FMCG giants make a dash for the premium beauty segment. HUL calls its recent acquisition of D2C skincare brand Minimalist a significant bet. CEO Rohit Java says the R&D focus and single-mindedness of the brand helped it break through in a competitive market. Says HUL will look at acquisitions where D2C brands deliver on fulfilling a gap in the market. PSU banks outpaced private banks on loan growth, net interest income and asset quality in Q3, but private banks report higher net interest margins. The cnbc TV 18 analysis shows growth is likely to be muted in Q4. India's automobile industry is expected to see muted sales growth of 1 to 2% in the next financial year, but SUVs are likely to be a bright spot with a growth of around 8%. The tax department accuses Volkswagen of playing the victim card before the Bombay High Court over the $1.4 billion tax dispute. Argues that Volkswagen is the only odd one out and at least 10 car makers are paying the prescribed tax rate for importing spare parts. US President Donald Trump turns on Ukraine's President Zelensky, calls him a dictator, asks why elections were delayed in Ukraine. British Prime Minister Keir Starmer backs Zelensky, says it's perfectly reasonable to suspend elections during a war. Rekha Gupta sworn in as Delhi's new chief minister, the first-time MLA, as the fourth woman to hold the post in the Union Territory. 6 other MLAs take oath as ministers in the presence of the Prime Minister, the Home Minister and top NDA leaders. The government pulls up OTT platforms after the Ranveer Alabadia controversy, issues a new advisory calling for stricter age-based classification of content online. Microsoft claims a quantum computing breakthrough by creating a new state of matter that's not a solid, a liquid or gas. Showcases a new chip that could power vastly efficient computers. Google claimed a quantum computing breakthrough with its new chip called Willow in December last year. All of that and more coming up, but let's take a look at the stock market action for the day. The markets opened lower in line with the Asian markets as uncertainty over the US's tariff policies and their impact on global inflation and central bank rate action kept traders exercising caution. Indian markets did trade in a tight range. Finally, the Nifty as well as the Nifty Bank closing in the red. The Nifty Bank was down by about 200 points. But today, some relief coming in for the mid-caps and small-caps. Both those indices closing in the green. The mid-cap seeing a bounce of about 1% and 1.5% higher there as far as the small-cap index was concerned. Well, that was the stock market action for you. But the big story this evening is cnbc TV 18 exclusive. The government will soon open applications for a scheme to promote the production of electric cars in India. Now, sources tell cnbc TV 18 that a concessional import duty of 15% will be offered, but if companies meet the scheme's eligibility criteria. Now, Tesla, which is set to start sales in April in India, was not a part of the stakeholder consultations. Parikshit is standing by with more. Parikshit, tell us more about the government scheme, what conditions it puts on the table for companies to be eligible to get the incentives, and where does this leave Tesla, and if it will at all make in India?
The central government will soon invite applications under the scheme for promotion of manufacturing electric cars in India, which will give global OEMs a 15% concessional duty as opposed to 70% currently. This scheme was announced in March last year, and the government has been holding consultations with the industry on implementation guidelines. The Ministry of Heavy Industries, which is the nodal ministry in charge of this scheme, has now prepared draft guidelines for feedback. The guidelines will soon be notified, and sources say government could open the scheme for applications in late March or early April. Sources say investment in both greenfield and brownfield projects would be eligible, but the amount of committed investment, that is $500 million, would be mandatory for both greenfield and brownfield projects. Companies can spend 5% of committed investment on charging infrastructure. the company must achieve a minimum revenue of rupees 7,500 crore by the 5th year of operation and 5,000 crore rupees by the 4th year of operations. The applicant will be fined in case it fails to meet the revenue criteria, and the fine can be in the range of 1% to 3% of the revenue shortfall. An interministerial sanctioning committee would be formed for approving and monitoring the implementation. Sources have also told us that Tesla has not participated in any recent stakeholder consultations regarding electric car manufacturing scheme. The government has received representations from almost all global and domestic OEMs, but not Tesla. However, this scheme will be opened within weeks, and the government is hopeful that Tesla will apply, and so will other OEMs. Among the other known criteria, the committed investment has to be rupees 4,150 crore. The scheme would apply to cars costing $35,000 or rupees 30 lakh and above. This is the cost of a shipped vehicle without the addition of duty. If approved, a car maker would get 15% duty on 8,000 cars per year, but the company must start making cars in India by the 3rd year of operations and achieve a domestic value addition of 25% in 3 years and 50% value addition domestically by 5th year of operations. Now, according to estimates, if a company received an approval under this scheme, then a $35,000 imported car would cost an Indian customer around rupees 36 lakhs, and an imported car costing $50,000 would cost an Indian customer around rupees 52 lakhs.
All right, Parikshit, many thanks for joining us. Let's see whether Tesla does make in India using this scheme. Now, automobile industry body SIAM has said that passenger vehicle sales in FY26 could witness a sluggish growth of about 2%, which is far slower than expected. Now, this could be largely on account of weak demand, concerns over affordability and the decline in entry-level car sales. SIAM has also said that inflation, the rupee depreciation and geopolitical uncertainties could cause poor growth in the segment. However, SUVs are likely to be a bright spot with growth of about 8%. Brokerage firm Nomura has said that most companies have a very cautious outlook on passenger vehicle sales for the next fiscal year. So speed breakers there for auto sector, specifically cars. And staying with the auto industry, the tax department has accused Volkswagen of playing, and I quote, the victim card before the Bombay High Court over the $1.4 billion tax dispute. The tax department is accusing the company of not paying the prescribed tax rate for importing spare parts. Ashmit standing by with the details. Ashmit, the tax department hitting right back. Take us through the arguments in court today.
Well, it was day 2 of arguments in the Volkswagen $1.4 billion tax case pending before the Bombay High Court. Now, Volkswagen argued that the tax department is acting with a 14-year delay. The notice comes in 2024, but it's based on a 2011 notification saying that this gives them an irretrievable situation of being confronted with a 12,000 crore rupee tax demand, which they possibly can't pass on to their customers, saying that if this clarity had come back in 2011, it would have given them the option of either passing it on to customers or shutting shop entirely as far as India ops are concerned. Also saying that they had a clarification from the Revenue Secretary at the time that Volkswagen was within its rights to claim that lower tax outgo of 5 to 15%. This was, of course, Volkswagen. We also saw arguments by the tax department. The tax department essentially argued that Volkswagen is playing the victim card, that it's Volkswagen's fault for not paying the rightful tax and not the department's fault for pointing that out. In fact, the department went on to argue that their main concern is with the Aurangabad facility, where there are a lot of these high premium models which come out of that facility. The argument that the tax department has made is that the local value addition there is less than 3%, that the bulk of the value of these cars coming out of the Aurangabad facility almost entirely imported, and therefore the tax bill is what the tax department said. And further, going on to say that the other players in the segment, so whether that's likes of Maruti, Kia, Mercedes, Volvo, are also compliant with the 2011 notification, which requires a higher tax outgo of about 30 to 35%. And these were the initial submissions that the department has made. The arguments, we understand, will continue next week on Monday.
All right, Ashmit, appreciate you joining us. Now, Walmart-backed PhonePe is gearing up for a potential IPO in India, but the payments firm has not specified a timeline for the listing just yet. Now, PhonePe changed its domicile from Singapore to India in 2022. The company says it has established a clear corporate structure with each of its non-payment businesses classified as fully owned subsidiaries. PhonePe was valued at $12 billion as per the last funding round in January of 2023. The company's FY24 revenue grew 74% year-on-year, crossing 5,600 2,700 crore rupees. Its net loss narrowed by 29% in FY24 to less than 2,000 crores. In fact, I'd spoken with PhonePe's co-founder Sameer Nigan at the Global FinTech Fest in August last year. When I asked about the IPO plans, Nigam had said he was nervous about the proposed 30% limit on UPI market share. But in December last year, the NPCI deferred the deadline to impose this 30% limit to December 2026. Take a look.
As far as going public, the market cap overhang is definitely a problem for us, right? I mean, I feel nervous going into the market if there's a 30% market cap lurking or looming and going and asking retail investors to put money against today's market cap. My concern is whether we do right by our shareholders. So I think one thing, actually, at PhonePe, we've always prided ourselves on is every single round from a Series A onwards, everyone's seen considerable multiples as far as return on capital.
And that's what's changed. The NPCI has deferred that deadline by another 2 years, and perhaps that's given the window to PhonePe to consider an IPO in India. The big newsmaker this evening, HUL Managing Director and CEO Rohit Java said the urban consumption will take a few more months to recover. In an exclusive conversation with CNBC TV 18, Java said that rural demand has already started to grow as macro factors have become favourable, adding that quick commerce is boosting sales of HUL's premium brands. Take a look.
Rohit, we've seen several changes happen over the last few months. We've got the budget delivering an income tax cut for the middle class, much needed. We've also had the RBI bringing down the interest rates. Do you believe that all of this is now going to provide the fillip that's been needed? Everyone's talking about the need for a consumption boost. Both the government and the RBI have done their bit. Do you expect things to take off? Are you starting to see any visible indication of that yet?
Yeah, the answer is yes, I do. I think the shift in the financial strategy started to shift towards more consumption from this budget and even the last one budget that came a few months back. I think all of these moves are quite material because we're talking of 30 basis points, around 30 basis points of impact of GDP. It's a large sum of money. It's definitely going to create stimulus for consumption. Importantly, I think maybe what's also helpful right now is that the rural economy is stronger. After many years of inflation and monsoon issues, I think this year the reservoirs are full, the agri-production is good, rainfall has been above average, and we can start to see already the signals of stronger rural growths than we did in the years before. And I think the urban consumption crunch that we've seen the last few quarters might take a few more months or quarters to wane away, but that should normalize because it was on a high base. So I do think that given that the macro factors are turning in the favor of consumption, the institutional policies are beginning to bias that, and that some of the things that we can't control, such as weather, has also turned in our favor. And India will always remain a very underpenetrated, big headspace of consumption. Though I do think that as we go in the quarters going forward, the consumption economy, or economy driven by consumption, is definitely going to look better. How long it takes, I can't say. I'm not a soothsayer, but I'm optimistic, and I think that all the signals are positive at this point.
But it's still perhaps a quarter or two away.
We are not waiting for that, so we are already doing what we can do, which is go where the growth is and control what we can control. So we already have a deep rural infrastructure. We get to a very large number of outlets in the country, almost 70% directly weighted value distribution. So we intend to go deeper and also invest more. And we already have brands for rural markets that are absolutely have a great product fit. We are also relaunching some of our strong powerhouses like Lifebuoy and Glow & Lovely, some of our brands like Clinic Plus, Sunsilk, they're already quite strong. So yeah, I think we are not waiting, we are already investing to basically be ahead of the curve as things have started to sort of turn.
Well, that's HUL's CEO, and he also called its recent acquisition of D2C skincare brand Minimalist a significant bet. Java said that the R&D focus and single-mindedness of the brand did help it break through in a competitive market, adding that HUL will look at acquisitions where D2C brands deliver on fulfilling a gap in the market.
The brands that really do break through have a few things, I think, about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and being really good on product. Because there's a lot of claims out in the market, but if you look at minimalists, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product. And they've kept the brand very consistent, very clean, very single-minded. And they've been very careful in pricing and not trying to get ahead too soon, having the patience to be profitable even in the first 5 years, and a frugal mindset, and getting immersed in the whole world of minimalist. They themselves sell. They have a D2C side, of course. They hack problems with the consumers. They know what's working, not working. It's that level of ownership I wish we could infuse everywhere, because that's really creates that immersion in ownership, the live and breathe 24/7 the brand. That's what makes for excellence. And when we do that in our existing brands, we see significant years of success, and when we don't take our eyes off the ball, and then we go to course correct. So really it's all about all of those things, nothing very complex, but hard to replicate.
You can catch that CNBC TV 18 exclusive conversation with HUL CEO Rohit Java tonight at 9:30 p.m. A CNBC TV 18 analysis shows that PSU banks have outpaced private banks on loan growth, net interest income and asset quality in Q3. However, private banks have reported higher net interest margins. Abhishek is standing by with the analysis. Abhishek.
Banking sector performance in Q3 FY25 was led by PSU banks. PSU banks outperformed private banks on key parameters like loan growth, net interest income growth on a sequential basis, asset quality, as well as return ratios. However, they lost out to their private counterparts with respect to net interest margin. But before we come to comparative performance between these two, let's take stock of the industry trend seen in Q3 FY25. So, Indian banking sector reported one of the lowest net interest income growth in last few quarters. So deposit growths are coming in at a huge cost, and unsecured growth, especially for private banks, is moderating, thereby impacting the net interest margin of the banking sector. Sequentially, if you take a look, operating profits for the banking sector declined the highest in last 5 quarters. This was also due to the fact that treasury income was strong in Q2 FY25 for many banks. Profit after tax declined for the sector sequentially, third time in last 5 quarters. So coming back to PSU versus private banks, the net interest margin of PSU banks declined by 11 basis points quarter on quarter, and that of private banks actually improved by 4 basis points sequentially. Now, PSU banks had entered the low-yielding corporate segment in the last few quarters, which actually was vacated by the private banks at lower yields. So this impacted their ability to hold on to healthy net interest margins. Now, PSU banks have not been into unsecured lending in the retail segment over the last few years. Guess what? That actually saved them from asset quality woes. So for 5 quarters in a row, their quarterly annual slippage ratio has been lower than that of private banks. In Q3 FY25, the slippage ratio might be at historical lows for PSU banks at around 0.7%. PSU banks have outperformed private banks on asset quality. So gross NPA ratio and net NPA ratio of the PSU banks actually declined on a sequential basis in Q3 FY25, while gross NPA ratio and net NPA ratio of the private banks increased quarter on quarter in Q3 FY25. Loan growth of PSU banks on a year-on-year basis has been better than that of private banks for second quarter in a row. Now, private banks' loan growth is actually impacted due to slowdown in loan growth momentum that you are seeing in SDFC Bank. So, return on advances on an annualized basis has actually declined for PSU banks and private banks on a sequential basis. However, PSU banks have outperformed on return on advances if you take a look at the 5 quarters. So over the last 5 quarters, their return on advances has improved by 39 basis points when compared to 15 basis point decline for private banks.
Abhishek, many thanks. Now, the war of words between US President Donald Trump and Ukraine's President Zelensky continues. Trump labeled Zelensky a dictator who refuses to have an election. In a post on Truth Social, Trump wrote, and I quote, "Zelensky better move fast or he's not going to have a country left," end of quote. Hours later, in a press conference, he accused Zelensky of doing a terrible job. Trump's comments came after Zelensky said the US president was living in a disinformation space governed by Moscow. Zelensky also said that Ukraine is not for sale. Trump's criticism prompted several European leaders to back Zelensky. Both German Chancellor Scholz and UK Prime Minister Keir Starmer said Zelensky was a democratically elected leader.
So unfortunately, President Trump, who we respect a lot as a leader of the nation that we really respect, the American nation, who supported us all the time, unfortunately, he lives in this disinformation space.
I love Ukraine, but Zelensky has done a terrible job. His country is shattered, and millions of people have unnecessarily died. And you can't bring a war to an end if you don't talk to both sides. You got to talk. They haven't been talking for 3 years. So we hope to see a ceasefire soon and to reestablish stability in Europe and the Middle East.
Well, that's Donald Trump. And staying with Ukraine, U.S. Special Envoy for Russia and Ukraine, Keith Kellogg, has arrived in Kyiv for talks with President Zelensky. This comes amidst a shift in U.S. policies towards Russia. This also comes at a time when Russia and the U.S. held peace talks in Riyadh without representation from Ukraine or any European nation. Russian President Putin has said that talks between the U.S. and Russia and Saudi Arabia are a first step to restoring ties with Washington. Speaking to reporters in St. Petersburg, Putin said that the two nations had agreed to resume normal functioning of diplomatic missions. The Russian premier added that the conflict in Ukraine could only be resolved after trust between Moscow and Washington was rebuilt, maintaining that Trump told him that Kyiv will be involved in future peace talks. Now, Microsoft is claiming a quantum computing breakthrough by creating a new state of matter that's not a solid, liquid or gas. Microsoft is calling a new chip Majorana, and it can power vastly efficient computers. Google had claimed a quantum computing breakthrough with its new chip called Willow in December last year. Quantum computing is still in its nascent stages with very few powerful computers in existence. Industry experts suggest the first commercially viable quantum computers could begin to appear in the next half-decade or so. Up next on India Business Hour, the government pulls up OTT platforms after the Ranveer Allahabadiya controversy. More coming up. And you can catch all of CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X and Geo Hotstar. After 27 years on the fringes, the BJP is back in the driver's seat in Delhi, and the party's top leadership chose Rekha Gupta as Chief Minister. Her first-time MLA Gupta is the Union Territory's fourth Chief Minister. She took oath at Delhi's Ramleela Maidan today. Prime Minister Modi, NDA chief ministers and top BJP leaders were present at the oath-taking ceremony. 6 cabinet ministers, including Parvesh Verma, who beat Arvind Kejriwal from the New Delhi constituency, also took oath today. The other ministers include veteran BJP leader Ashish Sood and Kapil Mishra, who was expelled by the AAP in 2017.
पहली कैबिनेट का एजेंडा हम लोग आज मिलकर तय करेंगे. आज पहली कैबिनेट होगी. सब हमारे विधायकगण वहाँ हमारी कैबिनेट वहाँ रहेगी और आगे का लेआउट प्लान उसी के लिए अकॉर्डिंगली तय किया.
हमेशा वो भ्रष्टाचार की बात करते थे, तो क्या आपको लगता है कि दिल्ली सरकार साफ और क्लीन रही है और या फाइलें खुलेंगी उनकी आपके कार्यकाल में?
एक एक पैसे का हिसाब देना पड़ेगा जनता का, और निश्चित रूप में जो काम जो भ्रष्टाचार पीछे हुआ है वो उजागर होगा.
Well, that's Delhi's new chief minister. Back home, the government has pulled up OTT platforms after the Ranveer Allahabadiya controversy. The centre has issued a new advisory calling for stricter age-based classification of content online. Rachna joins us now with the details. Rachna, take us through the government's advisory. What are they recommending?
The Union Ministry of Information and Broadcasting has issued a fresh advisory reminding platforms of their legal and ethical responsibilities. This comes after multiple complaints from members of parliament and the public raising concerns about inappropriate content on these platforms as we see the Ranveer Allahabadiya India's Got Latent issue roll out. The advisory reiterates the Code of Ethics under the IT rules of 2021. It clearly states that platforms cannot transmit content prohibited by law. There's also a strict requirement for age-based classification, ensuring that adult-rated material is appropriately restricted, and access control mechanisms must be in place to prevent children from viewing unsuitable content. The government has also emphasized on the role of self-regulatory bodies, making it their responsibility to ensure compliance with the Code of Ethics. Violations must be addressed swiftly, and platforms are urged to exercise due caution in their content offerings. Legally, the publication of obscene or pornographic content is a punishable offence under multiple acts in India, like the Bharatiya Nyaya Sanhita, the POCSO Act and the IT Act. This means that OTT platforms are not only risking reputational damage, but also inviting serious legal consequences if they fail to comply. This is not the first time digital content has come under scrutiny. In the past, comedian Kunal Kamra's content sparked similar debates on the limits of free speech versus responsible content regulation. However, while Kamra's case revolved around political satire, the current controversy targets the spread of obscene and explicit material. The government's stance remains pretty clear and firm. Whether it's political commentary or adult content, platforms must operate within the stipulated legal and ethical boundaries. It's important to note that advisories, while creating regulatory pressure and acting as a deterrent, are ultimately non-binding. The IT rules of 2021 remain operational, except for the fact-checking unit, the FCU provision, which was struck down in a split verdict by the Bombay High Court. However, government's real enforcement power does not go beyond content takedowns, but that's only so far.
Rashna, many thanks. Now, there's a rising sports star on the horizon. She loves horses and is only 15. The last few months have seen Chennai's Miraya Dadaboy win several top honours. Jude reports on the young rider's appetite for success.
Riding horses may not exactly be a walk in the park for you and me, but there's a 15-year-old prodigy in Chennai who's made quite the name for herself, winning multiple gold medals and surging ahead in the Asian rankings.
Miraya, come down the center line.
And while she may be riding to compete since 2021, Miraya first took to horse riding when she was only 4 years old. So it's little wonder that the 15-year-old has already begun stacking up one medal after another.
In the 2024 International FAI World Dressage Challenge, I placed gold all Asia in dressage in the youth category. In the 2024 Junior Nationals, I placed team gold with my team in the junior category.
At the Chennai Equitation Centre, Miraya is hard at work with coaches Isabel Hasselder and Vikas Pandey. The young equestrian trains 6 days a week before school begins. She specializes in dressage, which is a form of rider-horse synchronization, and show jumping. Both events have seen the 15-year-old reap the rewards of unrelenting work ethic and dedication. In fact, her coaches believe that it's this trait that is her X factor.
I think one of the biggest strengths Miraya has is she doesn't give up. So even if she falls down, she will be up the next few seconds and saying, okay, I'll get back on the horse.
But it isn't easy. The 10th grader says there's one challenge that she contends with every day that's even bigger than controlling a 600-kilogram horse.
The biggest challenge for me is probably my time, because in the morning I finish all my riding and then I go to school, and in the evening I have my studies and I have to do physical training. So I think it's a lot of time management and knowing where to allot my time and finish all my work.
Then there's the challenge of sponsorships too. Equestrianism isn't exactly a mainstream sport in India, and sponsorships for events like show jumping and dressage are hard to come by. But that isn't holding Miraya back from aiming for the stars.
I really want to make riding my professional career, and I'd love to compete and train and as a competition rider. So I'd love to do that internationally, and I would love to compete in the highest levels of dressage internationally.
With team golds and individual silver and Pan-Asian recognition under her belt, Miraya Dadaboy's next big leap is a spot and a medal at the Asian Games. For now though, the young rider is hard at work, making sure she gets the best from her horses. In Chennai, Jude Sanath.
Well, just 15 and galloping her way to success. Here's wishing Miraya the very best of luck. And with that, it is time for us to wrap up this edition of India Business Hour. From all of us here, thanks very much for watching. Do stay tuned. The news continues on CNBC TV 18.